This is the Martini Mortgage Podcast with Kevin Martini.
Hello, my name is Kevin Martini. I am the host of the Martini Mortgage Podcast, and this is episode 24. And I'm going to call episode 24 the cost. More specifically, the cost of not paying private mortgage insurance and the cost of waiting to buy a home. As a primer, if you are new to the Martini Mortgage Podcast, I am not only your host of the Martini Mortgage Podcast, but I'm also the branch manager and senior mortgage strategist with the Martini Mortgage Group at Benchmark Mortgage. Now, I have personally been in the financial services since the late 80s, and I have been in the mortgage arena right here in the Triangle of North Carolina for over a dozen of years, helping families not just here in Raleigh, but all over the great state of North Carolina. Now, I have found that home buyers on the aggregate overestimate the credit score needed to buy a home, and they overestimate the amount of down payment needed to buy a home too. Now, on page 12 of my fall 2018 home buyer guide called Things to Consider When Buying a Home, I address these two common misconceptions that are holding a ton of people back, in my opinion. Now, to get free access to this home buyer guide, just simply go to martinibuyerguide.com. Speaking of simply, I believe that this simply and effectively communicates not just the current market opportunity, but things that you need to know. So to get access, go to www.martinibuyerguide.com. Now, on this episode of the Martini Mortgage Podcast, I want to talk about the down payment misconception. Friends, this is a limiting belief that creates an obstacle for people to buy a home. This perception that 20% of the purchase price of a home is needed for down payment creates a detour to home buyers and the process for many because it is not needed. I want to be 100% transparent about something. With an open heart, I believe that home ownership creates a path to wealth. It also creates freedom. Now, in the 2018 State of Downtown Raleigh, which is created by the Downtown Raleigh Alliance, it denotes that the average rent in downtown was $1,444. You see, even if you rent, you are paying for a mortgage. You are just paying your landlord's mortgage for them. Have you ever thought about that? For many families, saving for a down payment is tough because this thing called life gets in the way. Do you know that the Martini Mortgage Group at Benchmark Mortgage offers low and no down payment home loan options? Let me say it a different way. Today, there are programs available for not just first-time home buyers, but also repeat home buyers that do not require a down payment, or if a down payment is required, it could be as low as 3%. Now, both of my children are mortgage strategists with the Martini Mortgage Group at Benchmark Mortgage. How cool is that? Alexander Martini, Logan Martini, and I were all having dinner this past weekend, and the discussion was, hey, if you can purchase a home with less than 20% down payment, why aren't more people doing it? Well, one possible answer is because people just do not know that they can purchase a home with less than 20% down. Another possible solution is because the perception of private mortgage insurance, also known as PMI. So what is PMI? Simply put, it is an insurance policy to protect the lender if you are unable to pay your mortgage. Private mortgage insurance, or PMI, is required for all Fannie Mae, and Freddie Mac loans, which are also known as conventional loans or conforming loans. If you have less than 20% down payment with these loans, you would be required to pay private mortgage insurance. As a side note, there's a unique strategy that we offer here at the Martini Mortgage Group called TAMI, which allows you to put less than 20% down with no mortgage insurance. Here's the killer thing about PMI or private mortgage insurance. It can go away. Yes, once you have built an equity position of 20% in your home, you can petition to cancel your private mortgage insurance or PMI. Folks, PMI is not a bad thing. It is what allows you to buy a home with a low down payment. Now, for illustration only, let us compare a $250,000 home with a 3% down payment versus a 20% down payment. With a 3% down payment on a $250,000 home, you only need $7,500. However, on that same $250,000 home with a 20% down payment, $50,000 is needed. I bet it is easier to get your little paws on $7,500 versus $50,000. Now, let me say this again. For illustration purposes only and for discussion only, let us assume a mortgage interest rate of 4.6%. With the 3% down option, the principal and interest payment would be $1,243.16 a month. And with the 20% down payment option, the principal and interest would be $1,025.29. Now, let's keep top of mind that when you do not put 20% down, you have to pay that private mortgage insurance. So, assuming a factor of 0.55 for discussion purposes only, that would add $111.15 a month to your 3% down payment option. So the total payment, principal, interest, and PMI on the 3% down option would be $1,345.31. Now here's a hashtag Martini Factor talking point. Number one, remember what I shared. The average rent in Raleigh was $1,444. The principal, the interest, and the PMI for a $250,000 house, which is 3% down, is $1,345.31. Wow, just about a little less than $100 less expensive than the average rent in Raleigh. Now, I get it. Putting 20% down saves you $320 a month. However, keep on the radar screen that the $111.15 for PMI is cancelable after you have a 20% equity position. So really that 17% more of down payment is only saving you $217.87 at a principal and interest level. Now, in the Martini family, I rather pay $217.87 more a month and keep $42,500 in my wallet. But that's just me. Here is hashtag Martini Factor talking point number 2. Let's assume you can save $420 a month for a down payment. That means it would take basically 10 years to come up with $50,000. However, if you save $420 a month, you could save a 3% down payment in less than a year and a half. There are opportunities costs with waiting to save for a larger down payment since home prices could be more expensive. Now, I'll talk about home prices in just a minute, but let's take a moment to talk about Fannie Mae, Freddie Mac, the Mortgage Bankers Association, and the National Association of Realtors. All these folks believe that mortgage rates will shift higher than they are right now, and who knows, while we'll wait, those rules to get a mortgage could be tougher. Remember, when mortgage rates move upward by just 1%, that reduces your buying power by 10%. I truly believe the flexible down payment option that I, Alexander Martini, and Logan Martini offer here at the Martini Mortgage Group at Benchmark Mortgage enable one to buy now and to begin building equity versus waiting 5 to 10 years to save enough for a 20% down payment. Now, I said I would talk about home values, so let me right now. There is something called the Home Price Expectation Survey. This is published by Pulsenomics, and it's over 100 folks that are deemed to be experts in forecasting real estate values. Here is the punchline of that report. If one purchased a $250,000 home in January 2018, by January 2023, that home, based on the predictions, would be worth $299,697. That $250,000 house, according to the Home Price Expectation Survey that was purchased in January 2018, in just 5 years would be worth $299,697. That means $49,697 of potential growth in family wealth over the next 60 months based solely on the increased home equity. Every day, Alexander, Logan, and myself, Kevin Martini, help families create wealth with real estate, and we all simply love doing this. In closing, if you have questions about whether you should buy now or wait until you've saved a larger down payment, let us get together to discuss it. If you are a prospective buyer who is ready and willing to act, but unsure if you're able, let us meet so we can help you understand your true options that are available today. At the end of the day, it does not matter how big the house is. It matters how happy the home is. Thank you for listening or watching episode 24 of the Martini Mortgage Podcast. Know that the Martini family is here to help, and our family is your family lender.
You're listening to the Martini Mortgage Podcast. Powerful information to help simplify and effectively explain the process of buying a home and securing a mortgage. Because it's not just a house, it's a home. The information contained in this podcast presentation is for general product information purposes only. Arklatex Financial Services, LLC, NMLS number 2143, doing business as Benchmark Mortgage, makes no representations or warranties of any kind expressed or implied about the completeness, reliability, suitability, or availability with respect to the information, products, or services. All loans subject to borrower qualifying. Other restrictions may apply. Branch Manager Kevin Martini, NMLS number 143962. Branch located at 5650 Six Forks Road, Suite 101, Raleigh, North Carolina 27609. Contact the branch by calling 919-238-4934. Equal housing opportunity.